Welcome to Taxtron tutorial video series. In this video we will understand what is Schedule 3, capital gains and losses. Do you know how to report capital gains and losses on Schedule 3? Understanding this process is crucial for everyone, especially those involved in trading or profiting from property. Today, we are diving right into this topic, breaking it down into easy-to-follow steps. Capital gains and losses are determined by the nature of the property and how it's dealt with. For example, if property is held for trading or profit, any gain or loss is considered ordinary income. Property held for a longer period for investment usually results in a capital gain. Now, let's break down some essential terms you need to know when dealing with capital gains and losses. Adjusted cost base represents the total cost of the property, including the purchase price and additional capital expenditures. Proceeds of disposition are the sale price of the property. Deemed proceeds of disposition occur in special cases, like gifts or death, where actual proceeds are not available. Usually, capital gain or loss occurs when a capital property is disposed of. The resulting gain or loss is reported in the year of the disposition using Schedule 3. Schedule 3 is your roadmap for reporting capital gains or losses from the disposition of various types of properties. It consists of 5 numbered columns, each serving a specific purpose. Let's break it down section by section. 1. Qualified Small Business Shares, QSBCS. Section 1 deals with the disposition of qualified small business shares, QSBCS. If you have sold QSBCS and incurred a capital gain, you may be eligible for the lifetime capital gains deduction. Report these dispositions on lines 10699 and 10700 of Schedule 3. 2. Qualified Farm Property, QFFP. Moving on to Section 2, Real Property owned by an individual or his or her spouse which has been used by the taxpayer, his spouse or family in the course of carrying on the business of farming in Canada. Dispositions of this property are reported on lines 10999 and 11000 of Schedule 3. But what if you had to reclaim a property due to unpaid mortgage amounts? That's called mortgage foreclosure or conditional sales repossession. Report any resulting capital gain or loss on lines 12399 and 12400 of Schedule 3. 3. Publicly traded shares, mutual fund units, deferral of eligible small business corporation shares and other shares. Let's explore Section 3, which covers to report capital gains or losses from the sale of various securities, such as mutual fund units, publicly traded shares, and shares issued by Canadian or foreign corporations. When an investor owns units of a mutual fund trust, they will receive a T3 slip, called the Statement of Trust Income Allocations and Designations, from the trust. For those who own shares of a mutual fund corporation, they will receive a T5 slip, known as the Statement of Investment Income. This income can consist of various types, including capital gains, dividends, foreign income, interest, other income, or a combination thereof. When an investor sells, or redeems, their units or shares, they are taxed on any resulting capital gain. The investor will receive a T5008 slip, known as the Statement of Securities Transactions, or an account statement from the mutual fund as documentation for tax purposes. You can report dispositions of units or shares on lines 13199 and 13200 of Schedule 3. 4. Real estate and other properties. Next, we have real estate and other properties. This includes vacant land, rental properties and commercial or industrial properties. When you sell any of these properties, you'll need to report any capital gains or losses on lines 13599 and 13800 of Schedule 3. 5. Bonds, debentures, promissory notes, crypto assets and other similar properties. Next, we are talking about bonds, debentures, promissory notes, crypto assets, and other similar properties. If you have disposed of any of these assets, such as selling crypto assets, you will need to calculate the capital gain or loss by subtracting the adjusted cost base from the proceeds of disposition. Report these dispositions on lines 15199 and 15300 of Schedule 3. 6. Personal use property, PUP. Lastly, let's talk about personal use property. This refers to assets acquired for personal enjoyment rather than investment purposes. When disposing of personal use property, potential capital gains or losses must be assessed according to specific rules. If the adjusted cost base, ACB, of the property is less than $1,000, its ACB is considered to be $1,000. If the proceeds of disposition are less than $1,000, the proceeds of disposition are considered to be $1,000. If both the ACB and the proceeds of disposition are $1,000 or less, you do not have a capital gain or a capital loss. Do not report the sale on Schedule 3 when you file your income tax and benefit return. It's important to note that any loss resulting from the disposition of personal use property cannot be used to offset capital gains from other personal items. This is because losses incurred through the depreciation of personal use property are considered personal expenses rather than deductible capital losses. That's a wrap up our practice session with Schedule 3. In the next video, we will practice Schedule 3 with real-world scenarios and demonstrate how it reports on S3. Thank you for watching. We'll see you in the next video.